This is amazing news, guys. Welcome to the Lending Lounge. Today we have some exciting news. Jose, do you know what that news is?
Woo! Tell me.
That news is that mortgage brokers now account for 24% of the market share in the mortgage space.
Hasn't been done since 2009.
This is amazing news, guys. The reason why is, or I'm going to tell you why I'm so excited about it, Jose. The reason is, I came into the mortgage space in 2008. In 2009, we took the brunt of everything that happened. Everything that was wrong in the world was because of mortgage brokers.
There was a good movie on Netflix a while back that discussed all this too.
So they made it seem like we were the ones putting everybody in bad loans. No. Everybody was putting people in bad loans. Not me. I'll be honest. I was brand new, so I was still FHA conventional. I wasn't, shifty or shiesty like that. I didn't know these things, but everybody was. I'm taking up for everybody, not just mortgage brokers. The big banks were doing, crazy loans. The wholesalers were doing it. The direct lenders. I mean, just to give you
no
an
income,
idea,
no doc,
no income, no assets. Jose, you could do a loan with a 500 credit score. If you had 3 trade lines open, those trade lines didn't have to be good. Meaning they could have been collections.
It didn't matter.
Collections. You had a heartbeat, bro. You were getting a loan. This is a crazy time. 2008, 2009, everything crashes again. Brokers accounted.
There's a reason for that. Yeah.
And then from that point down, it's just downhill.
So the good thing is, after that, heavy regulation took place.
Heavy regulation took place for everybody. More on mortgage brokers than anybody else.
Anybody else, right? The Consumer Financial Protection Bureau was, enacted, and then at that point it started, protecting the consumer. Basically, all this disclosures had to be done, so you can't close a loan in a certain amount of time. So this 7 days basically now, but all this heavy regulation. That's why we always ask for so much documentation. Proof is in the pudding, though, right?
Yeah, it's not because we want to; it's because we have to.
We have to. Absolutely.
And again, to avoid the same situation that happened before. But the reason I think one of the biggest things that makes me excited about this is that us as mortgage brokers, our job is to find the best deal for the client, right? 100%. So we're shopping around. We're going to the big lenders. We're going to the wholesale lenders. We're going everywhere to see what's the best interest rate we can find them. What's the best deal?
If you're not getting a loan through an independent mortgage broker right now today, you're missing out on like $9,400 of savings per loan. Bottom line, that's a statistic that's real.
That's a real statistic, meaning you come to us, a mortgage broker, and it doesn't have to be us. It can be any mortgage broker. You go to a mortgage broker and you say, hey, I want to do a loan with you. By the time you get to closing, you're saving yourself $9,400. That's the difference between using a mortgage broker and a direct lender. And that's a crazy amount of money. I mean, think about you moving into a house. What can you do with that? You can U-Haul your food, paint, furniture. Like
change your lock. Everything that we discussed on previous videos, right?
Those are all things that you can do now with $9,400. Not only that, it lets me know that you're also dealing with someone in your community, right? Like we're here in the community. We're in Polk County. We do loans in Georgia, in Florida, and we're here in this community, Polk County. Like we market heavy here in this area because the money that comes in stays in. Like it's not like you're doing it with a big bank that's based out of New York.
You're a number and just another paycheck for big banks. Let's get that.
Not only that, but again, that you do it at locally, you do it at the branch of the bank. But that money doesn't stay at that branch. That money goes from that branch straight to New York or straight to Washington or wherever that bank is based out of, and it's getting spent out there. Over here, we're the ones spending it in your local, little league baseball team that we sponsor. We'll sponsor teacher associations. We'll sponsor different things in the community, which these big banks aren't doing, and some will. Like there's a big guy. Walmart does do a lot of triple stuff. I give them that, but I don't see these other banks doing the things that we've done in the community or go out to the community to do.
The bottom line, the fact that we got 24% of the market is exciting. That means more people are actually going to mortgage brokers to get their loans, and that's a great thing. And we hope to climb that up even more.
And hopefully one day, we can make it in the next 5 years to 50%, and then they're all, hopefully in the future, everybody's using us as mortgage brokers because you will save money. Again, you will save money.
Lower rates, lower payments, lower costs. I mean, it's a win-win-win. It's like the trifecta, right?
100%. 100%. So we're excited about this news. We hope
Absolutely.
more people in this community are excited about it too. If not, we'll just be excited for you.
Life goes on, as they say. So we just keep doing what we do, and again, that's why we do what we do.
So again, this is another episode of Lending Lounge.
So closings are made simple.